a bit of softness over the last couple of days. But we're actually starting to see a bit of positive momentum. And I know that you and I keep getting into this debate. We're seeing, you know, bonds versus equities. Are we starting to finally see a bit of a transition, Kubi, given the fact that we're seeing a bit of positivity on the equity front?
Yes, we probably are. I think other than profit taking, occasionally the market is down, maybe 0.3, 0.5% as at close of trading. And when you look at the trend, it tends to be profit taking. But generally, the equities market has been moving up, like you said, over the past couple of weeks. And if you look at that exact time frame in the fixed income market, you'll find out that interest rates have moved downwards across all tenors. The longer the bonds, there's been a decline, not as severe as what we've seen on the treasury bills, where we've seen so much interest. The one-year treasury bill is down 150 basis points in 2 weeks. The 182-day treasury bill is down 100 basis points, and the 91-day bill trading in the secondary market is down 50 basis points over the 2-week span that you referred to.
Okay, Kubi, so what kind of trends can we expect going forward? Are we expecting these yields to drop further?
Well, for now, and maybe in the next week or two, yes, we do expect the yields to drop further. Reason being that there's an auction today. We're expecting the results of that in another hour or two. And we have a net maturity. We have about 260 billion naira maturing and 120 billion on offer. So there's a gap there. So those maturing, there's liquidity coming into the system, which will be active in the secondary market. And we've already seen a serious downward trend. I mean, we're seeing the 91-day bill for the first time this year. It's at year lows, if not 9-month lows, 12.9% and trading secondary market. And that's the lowest we've seen this year.
So, Kubi, again, if you could just give us an indication, are we looking at local investors interested, or are we seeing a combination of foreigners and local investors as well? This is amazing demand that we're seeing coming through. And, you know, as you say, that, you know, levels that we've never really seen on some of those, on some of those bonds.
Eleni, it's a combination of both. We have local investors. Interest from local investors has been on since last year. You know, the retail and the corporate and the pension funds, they've had interest in this market since 2011. It's this year that we've seen a lot of interest with the stable naira. We've seen a lot of interest from offshore as well. But now, I mean, yields are dropping a little bit. So we'll be looking out over the next month or two to see if that level of demand will go down slightly, because again, we're talking from the peak of the market. We're looking at a 300 to 350 basis points drop. That's significant. Maybe people will start taking a second look at whether the currency risk outweighs the interest rate benefits. And again, we are seeing some slight, very slight depreciation. The naira is down against the dollar very slightly, though nothing to give concern at this point.
Let's just touch on that, because we're seeing immense dollar strength coming through globally. I'm sure it must make the central bank's job far harder to keep it within that band, you know, and ensure that it is quite stable. Give us an indication of what actually occurs when we see such immense dollar strength.
Well, like you said, we've been seeing it across. And for now, I mean, look at the level of reserves. We've been growing reserves steadily all year. So I don't think central bank has too many worries yet. I mean, we're still in the first half of the year, and they've not had to. If you look at the trend overall of the naira, it's been appreciating. It does fluctuate 5 or 10 kobo. This week it has been stable, a mild devaluation on Monday. In the interbank market, we've seen maybe a 40 kobo devaluation, 157.20 to 157.60. But other than that, again, these are not levels that are a cause of concern, but it's a trend we're watching.
You're talking about the bond auction. We know that there's a big sovereign bond auction on the 16th of May, which is coming through. 5 to 10 year paper that is going to be implemented. Kubi, what is your view on the paper that is going to come to the market? We know the DMO has actually been putting out a lot of advertisements, just proving that Nigeria has a very low debt to GDP ratio relative to the other countries on a global level in the emerging market space.
Yeah. Well, you know, I had mentioned that to you because that's a conversation we've had before as well. And I'd also said, you know, I'd done some reading that compared to some other countries, it's still low. And I think the DMO will probably be very happy with where they're seeing rates trend. I mean, we're talking they're going to be able to issue those bonds probably in the range of 14 and 15%, whereas 4 months ago, they would have been looking at 16.5 to 17. So they're probably very pleased with the trend they're seeing. And for now, I mean, if you look at the calendar, they're going to continue borrowing, they're going to continue funding capital, capital developments. So they're probably just very happy that at least the interest rate burden will at least stay same and not continue to increase.
Okay, Kubi, and what are the bond yields also just telling us about what the monetary policy side of things, on the interest rate front? Oh, can we get any clues in terms of what investors are thinking on the monetary policy side?
Well, they're probably watching again for when the next meeting, what will be the outcome of the next meeting. Again, one of the drivers is liquidity. There's been a lot of liquidity in the system. We're seeing liquidity from different sources, so we have a lot of Naira. However, at the same time, the central bank will be tempering where they want to fix the rate against what we have as reported inflation. Inflation slightly up. The latest inflation figures may be up by 0.5%. So it will be a balance between the two, and I guess we'll just be watching to see what comes out of central bank next.
Also, Kubi, looking at investor sentiment on the ground, we were waiting for those first quarter bank results. We spoke about it at the beginning of the interview. Would you say overall there's just a bit of optimism that is starting to filter through, or do you think that we could actually see a bit of caution? And how closely are you watching the global scenario that is playing out? Again, we look at Africa and we say that we're relatively immune from some of the troubles, but the truth is that a lot of money has been flowing here because of the stimulus that we've seen on a global level.
That's true. Well, I don't think Africa is completely immune. I mean, 2009 proved that I mean, if there's a crisis in the globe, around the globe, there will always be some level of contagion. So no, I don't think anybody believes we're totally immune. Maybe we're not directly euro linked, we're dollar linked, but at the same time, of course, there's going to be a ripple effect from what's happening in Europe. So that, of course, should be a cause of concern for everybody. We're still watching. It's not clear yet. I mean, elections have just taken place. I think bankers and governments are still worrying about what's going to happen and planning and just trying to make sure that, I mean, if Greece defaults, it will be orderly. So there's not so much clarity around that. But in terms of for us and the equities market, we've seen some good results come out first quarter. And we've seen that reflecting in the stock price as well. The stock market is picking up slowly. And we'll be looking at second quarter. Is it sustainable? Because you've seen something in the first quarter, 2011, maybe not so good. The natural thing to do is watch another quarter and see. End of second quarter will show a very definite direction if we're out of the woods completely.
Fantastic, Kubi. We have to leave it there. Thank you so much for your time. Great to have you on the program. And Kubi Momoh, Head of Market Risk, United Bank for Africa.